And welcome to another edition of the Nerdy Agent Podcast. I'm your host, Luke Pedersen, with my brothers and fellow nerds, Josh and AJ. They're both reading up on the government shutdown that we're going to talk about today, and how it affects real estate, how it might affect you as a potential home buyer, seller, or agent, depending on who you are.
Or renter,
depending on who you are. To start, can one of you give a rundown on what a government shutdown is? Why did this happen?
when Josh, when your kids are both wanting to do the same thing and they start yelling at each other about the thing they want to do,
It's TV shows is usually what happens. They both want to watch TV, but they each want to pick their own show.
See, at my house, it'd be like, well, I was playing with that toy or that ball or that thing, and then he took it from me, and now I want it, and then there's a fight that ensues. It's kind of what's going on right now. And there's not really any...
And then no one gets to play with the ball.
No one gets to play with the ball. It's really interesting. So they're trying to create compromise. Both sides are, I believe, I haven't followed enough, trying to throw things in that have nothing to do with keeping the government going. Some people are pushing for some sort of temporary relief to get the government just back up and active. But even that has run into some roadblocks.
And I shut down because of
the spending bill, I believe. So they have to pass bills to ensure they can spend the amount of money that they're spending. And right now they ran into a deadline. They can't agree on how to pass that spending bill. And so now there is a quote unquote government shutdown that does not shut down the entire government. The Senate and the Congress are still, I believe, trying to figure this out. I think there's a recess going on at some point. Josh, do you know anything about that?
I do not.
But so, yeah, basically a large number of government employees are currently either furloughed or just at home not working because the government shut down.
And one of the big ones that has nothing to do with real estate that you might have to deal with, which I might have to deal with next week while you guys are shooting this podcast and I'm in Times Square, New York City, is the fact that the TSA workers have to go to work, but they don't get paid.
And now there's concerns about the back pay now. They're threatening things.
Oh yeah, there's a ton of stuff that goes on.
Air traffic control.
They still have to go to work, but they don't get paid.
But there's a lot of air traffic control that's just super understaffed right now, is what I heard. So
that's just a separate thing. Yeah, they fired a bunch of them. That was a while ago.
But no, recently they said because of the shutdown they're going to be
more of that. Oh yeah. Wow, more.
They said they're having to cancel or delay flights.
So essentially, the majority of the government shutdown? No, just
thousands of flights have been canceled or delayed as a result of a shortage of air traffic.
See, that's crazy. So
we're expected to work without pay.
Now, what matters is how this affects real estate. And if you are in real estate, you've probably been pushed 10 different articles already about this. If you haven't heard about this, this is going to be helpful information. So what are the big hitters on how this could affect? Let's talk about the mortgage rates first, and then let's get into the specifics on financing and whatnot.
Yeah, we talk a lot on mortgage rates, and a lot of the stuff we talk about on mortgage rates pertains to the different reports that are published. So we talked about the accuracy of those reports a number of times, but your CPI data, your PPI data, your jobs report data, all of these things that are published by the government impact the bond rates, which then flow through into the mortgage rates. And so with the government shutdown, that is basically stalled. And so if data is not coming out, essentially what happens is the whole market, the whole approach to rates kind of stalls out too. I mean, there will still be data that will come out that might impact bond markets, but for the most part, everything kind of just sits still. And so there's, as we've talked about mortgage rates, I kind of said I thought they'd sit still. This isn't why I thought they'd sit still through the end of the year, but it is interesting to note that it kind of has just stopped everything for the last 9 days as they've stopped reporting data.
And there was a huge jobs report that was supposed to come out last Friday, right?
And it didn't come out.
It didn't come out. So we don't know what happened with that.
So that's, I mean, we've talked about a lot. We live in an economy that relies heavily on data, whether it's you go on Amazon and you're looking for a specific product, like you're going to look at all of the reviews and all the data that exists on there. Now you have the world's largest economy, I still think. And they're trying to make monetary decisions, but now they're kind of flying in the dark because they have data from private companies. Goldman Sachs came out with some data. They said the jobs report was probably going to be worse than we thought, but like we don't have the actual numbers. And so to know for the Fed to know what they're going to do in October when they meet, is going to be fascinating. Because
does the Fed not have any access to data that we don't have access to?
I would hope that
they must have some
would hope
sort
that
of
they
access to something, right?
One would imagine, but I think a lot of we've talked about this before, a lot of the data gathering that happens when it comes to jobs reports or consumer prices, producer prices, a lot of it's very manual still. And it relies on surveys of companies, and it relies on, from what I've been told, it relies on people going out and actually shopping for products in different metro areas and figuring out how much money the price of eggs and milk are, or the price of a t-shirt is at Target. Like, it relies on a lot of these data points. I don't know why they're not just using the internet to figure this out for them, but from what I've been told, they still have like secret shoppers that go out and they determine these consumer price numbers. And I'm guessing the producer price stuff relies on surveys as well. And if no one's sending the survey because they're sitting at home not working because they're not being paid, then we just don't get the information.
So that's going to make the rates likely stay where they're at, depending on what the Fed chooses to do.
Well,
obviously,
according to Orphy, I hope I don't screw up your name, Orphy. Orphy Devongwai.
Oh yeah, that's the guy on Everyday Economics.
Is he on Everyday Economics?
Yeah, I'm
reading his article. He seems very smart.
He's awesome. Yeah.
He's a PhD in economics from the University of Southampton. He wrote an article for Zillow. He's a senior economist for Zillow's economic research team. He says, rate volatility could worsen because now what your experience is like, to your point, Luke, like the Fed's flying blind, quote unquote, but the secondary market's still going to try to win if they can.
Yeah.
So people are going to make big swings based on data that they have that maybe they think is proprietary that nobody else has, in an effort to capture some profit.
Or to be honest with you, I mean, these people are, at the end of the day, they're very knowledgeable gamblers.
Yeah.
It might also be like, if I do this, the market's maybe going to do this, and then I can make money without even data. They might just be trying to gobble something up for whatever reason because they think the psychological side of it.
Yeah, and I do think that, I don't know, again, you're Goldman Sachs, like, what's your incentive to come out with a report that says this or this? I mean, it's hard to know nowadays what's really real and what's not. And so we kind of rely on, hopefully, nonpartisan people within the government who are the last remaining, I don't have a policy attached to this people, hopefully, that come out and say, here's the real information. Everybody else was kind of spinning it. And then the Fed can hopefully make, again, a nonpartisan decision for how they're going to move the economy forward.
If we're making a guess and the government's still shut down, is the Fed just going to hold tight? Probably. That would make the most sense.
I mean, at some point, I can't imagine they'll keep the government shut down for, it's been 9 days, right? But like, how many days could this possibly go on for?
It depends.
The impact could be significant.
What's the longest government shutdown that's ever happened?
It depends on how cool the ball is, Josh. That's the thing. If it's a really shiny, cool ball, they're just going to keep fighting over it.
The funny thing about that...
Or it depends on how stubborn the leaders of whatever they are.
35
days in
2018.
If it's a Pedersen ball...
35 days in 2018.
Wow.
See, like Brody right now, my second kid, he'd be trying to get some candy thrown into this deal. I can tell you that right now. Like, if I don't get candy for giving this ball up, I'm going to hold on to this ball as tight as I possibly can.
You should be going for they're going for health insurance, but
health insurance. See,
who knows?
Health insurance for who?
Good analogy for the parents out there, but that's really what's kind of happening.
So as far as real estate goes, let's just say there might be volatility in the rates. The Fed might do nothing. Who knows? There's no reports, right? At the end of the day, when we talk about when you don't know what's going to happen, when there is uncertainty, the best thing you can do is probably just decide based on your specific situation. So I wouldn't make any decisions probably as far as the rates might go up, so I shouldn't sell my house. You're just going to do whatever's best for you in this case, and we'll see what happens. But as far as I'm transacting real estate, or I'm looking to buy a house right now, there's talk around what that looks like from a loan approval and the different types of products. What do those look like?
Yeah, but HUD is involved, right, through these processes. So if HUD is shut down, furloughed staff are essentially doing things like rental assistance, housing vouchers, community development grants, fair housing enforcements, There's some underwriting components to things that are managed at the federal level.
FHA and VA loans, probably.
Yep. So loans tied to federal programs would be the first to slow, perhaps the last to catch up when things resume. So there's some concern about, will the processing portion of the home buying cycle slow? Like, will there be certain things that can't get done because they require HUD oversight or HUD involvement?
And what happens to those who desperately need affordable housing that are in Section 8, maybe here in our Twin Cities area, and the vouchers aren't coming in?
That's what I don't know.
What's the landlord going to do in that situation? So there's a lot of implications. I know we're mid-month. I think we've been shut down for how long now?
9 days.
So
October 1st was the first day.
So we might have missed the housing voucher payment on October 1st for thousands, tens of thousands of houses across even just our metro area. That happens through November. It's like now kind of what's going to happen.
Yep.
It's very fascinating.
So
the stuff did you have something?
No.
The stuff tied to the government, if I'm a conventional buyer, what does that look like?
I don't think Fannie and Freddie are necessarily going to be an issue. Notably, one of the big reasons why is a lot of those loans are being underwritten by the banks themselves.
Yep.
And they maybe will just wait to move those products onto that final stage of the marketplace. I would imagine that Fannie and Freddie are somewhat impacted by this.
Are they shut down at all?
Not at all. They're under conservatorship, so they're not actually a part of the government.
Mm-hmm.
They're just being managed by government people. I don't know the exact answer to that, but maybe Josh has a little more insight on it.
Certain things have been obligated through November. But the federal housing, the FHA will not accept new multifamily mortgage applications at this point in time.
That's an interesting one.
That's a big thing to know.
Yeah. 71% of HUD staff has been furloughed.
That seems like a lot of people.
That's a lot of people. And they will close
what about-
multifamily mortgages with firm commitments, but will not accept new applications. And even those deals likely will face significant delays.
But Fannie and Freddie are likely going to be
Yeah,
continuing as is. That's the article I read.
And that's interesting. So if you're an agent right now, like an interesting scenario, I just had a listing. And,
Shutdown will not affect Fannie and Freddie.
Yeah. I mean, the things that we're seeing right now in the real estate market, and I guess I could see the silver lining in this one. It's kind of crazy, but I sold a home in multiple offers to an FHA buyer with no inspection, and the buyer got deported a few days after. This is not something I've experienced in real estate. Pretty sad and wild. But then the new buyer is actually a conventional borrower. So it's really interesting to see some of this stuff play out. But maybe if you have listings right now or you have buyers that are under contract with FHA loans, you're probably going to have to hammer on financing to try and get yourself to the top of the queue.
Or right now it's maybe time to just start pushing as fast as possible and close that thing as soon as you can. Because if it does drag out, I don't know how it starts to affect it. If it becomes 30 days, does that affect that more than when it's 9 days? That's a question mark.
Right. Yeah, absolutely. I think it's not as impactful to our local market, but FEMA cannot do any new or existing policies, flood insurance policies. So
Any?
See, I feel like though, like FEMA's so funny. Have I told you my story about flood insurance in my cabin?
Mm-mm.
So I have a shop across the street. You guys know that, and it's not even on the same side as the cabin. The cabin sits 4 feet above grade on the lake side of the property. I was required to have flood insurance for the first 2 or 3 years because the shop across the street had like 4 square feet on the back left corner that was on the 100-year floodplain.
I mean,
FEMA
close to that marsh back there too.
FEMA would have charged me, but it only covers if it hits my first floor of my actual house itself. So the water would have to rise 4 feet above the street to actually give me a claim. FEMA would have charged me $4,000 a year to have a policy on that property. But they have private flood insurance that will be good enough for the mortgage company. And so I had private flood insurance for $1,000. So I basically just
give $1,000.
Cut up 10 hundies every year for 3 years. And now they removed my flood insurance from my requirements. So it's wild. 35 days is the longest.
Has there ever been a claim on a private flood insurance?
No.
I don't know.
There has not. Keep going.
So it's important to note. So Fannie and Freddie, just why this is actually the case, they are owned by the U.S. Treasury, but their operations are not affected by the government shutdown because they are self-funded and do not rely on congressional appropriations to pay staff.
Yeah.
So they essentially are running their own business, but they are owned by the U.S. Treasury post-2008, which then allows them to basically pay their own people because they're making money and
they're always making a ton of money.
which is good for us to know, though, because I think obviously that would be a huge deal if they were impacted.
I would love to know, this is a different note, but pre-2008, if the government shut down, there just weren't loans.
No, that was a private company at that time.
Pre-2008.
It
Was
It
private.
became owned by the U.S. Treasury after 2008.
That's what it is. It was a private company.
Yeah. Yep.
So
Josh, did you give the longest shutdown in history?
35 days.
35 days, 2018. That was I think we had one in like 2020 as well, but
This is right around the same, maybe a year early in his first cycle.
how nice was the ball in 2018? Was it really nice? Was the shiny ball?
It was essentially the same administration that they're probably fighting over the same things.
So we'll see. I mean, that'd be interesting.
we'll
If
see
we
what
get
comes out of it.
35 days would be a long time.
A long time. So essentially, at the end of the day, though, it seems like stuff's going to stay. I mean, it's decently similar. If you're dealing with, say, government-backed HUD programs, you're going to struggle.
Down payment assistance.
There's going to be
we
stuff
talked
that
about.
slows down. But if you're doing conventional buyers, which the majority of still is conventional buyers, stuff's going to continue to kind of move as is. The only thing that I'd throw out there is that if you are looking to buy a house and potentially this drags on a little bit and some uncertainty creeps into the marketplace, is there an offset of buyers that disappear and don't look to buy houses, in which some opportunities could exist? Potentially.
Yeah, maybe. There's also this component of like, if you have clients, if your clientele is heavy in the multifamily space, it impacts you on both sides, because it could impact you in terms of the FHA components of what you're needing to do from a multifamily standpoint. It could also impact you, though, in terms of your tenant profile and whether they're actually able to pay for your multifamily units from a rent standpoint. So I think if I was living in that space, that's where I would probably have some talking points ready to ensure that my buyers were pretty aware of this. Now, if we've never had a shutdown more than 35 days, if you really are in the middle of that, the odds of this becoming more of a long-term problem for you as a buyer of multifamily units or an agent who's selling multifamily units, not necessarily a huge concern.
Could be a good opportunity to add some value for your clients, become the expertise in this.
Absolutely.
This sector, though, because you do need to make sure you understand what you're talking about, especially if you deal with this. That's all we have this week on the Nerdy Agent Podcast. As always, remember, better